how are you assessing the current recovery? Is it going to be now sustainable? And do you think the worst is behind in terms of the correction that we had seen thus far?
I think one good part about what has happened in the markets is that the CPI numbers for February which have come in have pleasantly surprised the markets. It's a 7-month low at 3.61%, and that gives a very strong indication that possibly in the month of April we could possibly look at another rate cut. Which is why I think the market should be pleasantly surprised. I would not be surprised, if possibly the March number also for CPI comes on a lower base. So I think once the CPI inflation number comes down, that gives a lot of comfort to RBI in cutting interest rates going forward. Secondly, the dollar index, which I've been advocating for quite some time, on your channel also, that dollar index is now down from 109 to 103 odd level. So this has given a great amount of sentimentally good feel factor to the markets. It clearly means that the dollar is getting weaker. The other emerging markets currency are getting more stable. And obviously, FI outflows, which you have been seeing in the last few weeks, have considerably come down. So, these are all positive indications that possibly we could see the markets stabilizing now. I think the markets will remain a little in a sideways zone, but at least the aggressive selling is now completely out. So we could reasonably say with some conviction that yes, the markets have reached a kind of type of immediate near-term bottom. And most importantly, I think now the market should be reacting to the corporate numbers, the January to March quarter numbers, which I believe are going to be significantly better compared to the December quarter. So all said and done, if there is a indication that the numbers are much better, then you're going to see a lot of money flow coming back in the market again. But the near-term trigger and the key trigger for the markets to go up significantly would obviously be the stoppage of FI outflows. Possibly from the April to June quarter, you could see some of this happening. And I think if that happens, then I think you could see the markets again moving upward. So I think this is a good time for investors to start nibbling and build portfolios and be constructive on good quality stocks. I think the markets have already discounted 80 to 90% of the damage. And I think now any significant fall from these levels looks very unlikely.
If you like the video, do like, comment, share and subscribe.